Happy Monday traders, and welcome to the last trading week for July. Look, July has been an exceptionally bullish month for markets, but coming into this last week of July, there is a lot going on. We do have the tariff deadline on August the 1st, which is on Friday. We've got 3 central bank meetings, and we've also got a ton of top tier economic data, so a real lot for the market to get through this week. So let's start off with tariffs and trade deals. Okay, so this morning, before the market opened, we did get some news with respect to trade deals, and it seems as if the trade deal with US and EU is done, and Trump has come out and said that this is the biggest trade deal that has been done so far. So the EU will get that baseline 15% tariff on August the 1st instead of the 30% reciprocal tariff. And part of that trade deal is that the EU will invest about $600 billion in the US, and that they'll also buy a lot of energy, oil and gas from the US, up towards $750 million to the end of Trump's term. So yes, big news there. And also we're getting some more headlines that the US and China have got 2 days of trade talks starting today in Stockholm in Sweden. But there are some leaks that China will get another 90-day delay on reciprocal tariffs. Obviously this is the biggest trade deal that they need to get done, and it's very complex. So they are giving it looks like they are going to get some more time on that. But anyway, the combination of both of those headlines, super positive. So market is doing what it has been doing the whole of July, and we've seen risk rip on the open. S&P gapped up about 30 points, new record highs. NASDAQ gapped up over 100, about 120 points on the open. So we are starting the week very positively, again on the back of good news on trade deals. But yes, look, on August the 1st, so on Friday, reciprocal tariffs do go live. The US expects to earn about $700 billion a year from these tariffs. So over the course of 10 years, it's about $7 trillion. Someone has to pay for this. And I would imagine obviously a lot of this is going to be passed on to the consumer. So we're finally going to see some of the tariff effects, post August the 1st. And obviously the market has been super complacent with the tariffs. So let's see how that plays out post August the 1st. This week is a big week for central bank meetings. We do have the Fed on Wednesday US time, early morning Thursday for here in Oz. Look, the Fed does not, the market doesn't expect the Fed to cut rates at this meeting. But look, it will be a very interesting meeting nevertheless. Obviously the press conference after the rates decision will be closely watched. Powell has had immense pressure from Trump to start cutting rates. So let's see whether or not he actually does start talking dovish or not. Market does expect, up towards, 2 rate cuts towards the end of the year in the September meeting and the December meeting. So it'll be interesting to see whether or not Powell does start talking dovish, or whether or not he sticks to his guns and says that they really still need to see the tariff effect on inflation before they resume rate cuts. But no doubt it is going to be a potentially market moving meeting. The following day we do have the Bank of Japan. This certainly will be another interesting meeting, for the simple fact is that the BOJ is the only central bank globally that still needs to and is raising rates. They probably would have already raised rates again if it wasn't for what was happening with tariffs. So they basically went dovish again with all this tariff uncertainty. But last week the Japanese did make a trade deal for the US, so that obviously takes away some of that uncertainty. So potentially the BOJ could be hawkish at this meeting. No one expects them to actually raise rates at this meeting, but no doubt if we do hear some hawkish talk that potentially they could go before the end of the year. That certainly will get markets moving, especially dollar yen. So I think that bias is probably to go into that meeting long yen, short dollar yen. And see how that pans out. There is also a Bank of Canada meeting as well, but no change expected there. It's probably probably a non-event for the market. As far as key data is concerned, the key data really kicks off on Wednesday, and that's here in Australia. We do have Q2 CPI coming out. The RBA did not cut rates at its last meeting because it was waiting to see that they were getting progress on inflation. They really wanted to see this Q2. The trim mean is expected to go from about 2.9% down to 2.7%. Look, if we do get that trim mean moving lower towards expectations, I'd imagine that we probably will get that rate cut, which the market is expecting on the 12th of August, so coming up soon. But if we don't get that trim mean going down towards or at as market expects to 2.7%, so slightly higher, certainly that's going to put doubts on whether or not the RBA will actually cut rates in August. So certainly that's going to be moving Aussie markets around when we see that quarterly 2 inflation number. In Wednesday, we also get Q2 GDP for the US. That is expected to be positive, come out around about 2.5%. That's a good result. So watch how bond yields react to that. Obviously, if we see bond yields spiking higher, then basically we'll see probably the US dollar bid. So get long US dollars on the back of that. Then on Thursday, we do have some more important data out of the US. We get US PCE inflation data for June. This is the Fed's preferred inflation gauge. Now that is actually expected to marginally increase. So the core number there year on year is expected to go up from previous 2.7, maybe up towards 2.9%. So that is going in the wrong direction. Obviously the Fed wants inflation lower, and this is happening before obviously the tariff effect. Once again, watch bond yields higher, US dollar will follow. And finally, on Friday, we do have non-farm payrolls out of the US, which is obviously one of the biggest market moving numbers we get from the US. Market is expecting that to come out around about 100,000. Headline unemployment rate to go from 4.1 back to 4.2%. One of the reasons why the Fed has also been on hold is because the job market has been solid, very positive. So if that continues, then it sort of gives the Fed the green light to continue the way it has been, unless they see some progress on inflation, which at the moment it's not happening either. But again, yes, that number will be closely watched to see whether or not the labour market is starting to weaken. The Fed does expect unemployment rates to trade up towards maybe 4.5% before the end of the year. So look, and then on Friday, obviously, we do get reciprocal tariffs go live. And the seasonality for August for market is nowhere near as positive as what it has been in July. July, the last 10 years, every single month has been positive. Average of 3.4% for US equities, which we have now achieved with S&P trading above 6,400. So we are doing even above expectations for an average month in July for equities, but in August, last 10 years, we've had 5 positive, 5 negative months, so it's a coin flip of how seasonality turns out for August. So potentially we may see this huge bull run in equities maybe slow down at least. Look, a lot on, so you've got to really focus this week on your trades. Good luck, and we will catch back in with you shortly.